Yeah, good evening. See, I will quickly run through yesterday's example, which it got mistake. That is why it was not getting zero. See, whatever entries I have passed on 3 years basis, but actually it has to be passed on monthly basis or on yearly basis, not on 3 years. Just to show you the example, to make it easy, I have done this way. Okay, so the difference, whatever is coming here, this
Sir,
entry actually it has to be passed.
Sir,
Sorry?
excuse me, sir. Sir, your screen is not visible. It is blurred.
Yeah, I
Can you
sent the
just
text.
zoom
You
it?
can. Yeah, I sent the
Okay.
text.
It is
Right.
visible?
You can open that Excel also.
Okay. Huh.
Yeah.
No, that is not available. You can open it from
Same. Explain that 70 rupees per
See this difference, whatever I am showing 20,000, 5,000, 10,000. This difference is I have taken for 3 years together. Okay, because we have taken the example in such a way that up to 3 years, 1 lakh is the rent. This 1 lakh is rent for 3 years. Okay, and 1,20,000. Average rent is 40,000. So when I do the equalization every year, it will be 40,000 only as per the standard. Okay, so here 0 to 3 years, it is 3 years, 1,20,000. Again 4 to 6 years, it is 3 years, 1,20,000. Again 7 to 10. Here there was a mistake that here also I had taken 1,20,000 as average, which was wrong, and it is 1,60,000. Okay, so 1,64 years and 5 years 2 lakhs. So entire amount is totaling to 6 lakhs. So you do as per agreement. This is the billing and this is the as per standard. So what you have to do, whatever the difference on yearly basis you get between these two numbers, you will make the entry as notional debtors account debit to notional income. Notional debtor income is less than your average income, then notional debtors will get debited and notional income will get credited. Where the billing income is more than average income, then it will be notional income account debit to notional debtors, because here you have accounted as per billing and you have to increase your income to the extent of to reach that average income. That's why you are crediting income and debiting debtors. Here you have already billed more than the average. You are reducing the income to the extent of this, whatever the difference is there. Okay. The same logic applies even to the tenant also. Tenant also has to take similar entries as an expense also. Okay. So that you have to keep in mind. This will not affect your direct tax or indirect tax. See, the total income, whatever you will be reporting in the first year or first 0 to 3 years, increasing your income, and you not consider it as your income, you will do in adjustments that income not to be considered, that you will reduce it. Okay, this will not affect your direct and indirect taxes. Okay, so you go through the Excel. If you get any doubt, you can tell me. Okay, now we will move to further. So now what is left in our first topic is employee benefits is left, accrual of interest and deposits, accrual of interest on borrowings. So employee benefits. Let me take employee benefits. There will be two benefits for employees. One is short-term benefits, one is long-term benefits. Okay. Short-term benefits, you like bonus. Okay. This you can say some incentive, bonus. Why I am calling this as short-term benefits is it has to be given to them within a period of 12 months. See, whatever bonus an employee earns during the financial year, say 22-23, it has to be paid by 23-24, or it will be paid in the same year by March. Okay, so these are the short-term benefits, and there are like gratuity, okay, unutilized leave salary, paid leave, okay, which they are eligible, or which they are eligible for encashment. Then it is all long-term benefits, and these long-term benefits will be paid only at the time of retirement or at the time of leaving the organization. Okay, so for this, you all know, as per the norms, they have to get actual valuation, and then they have to take the expenses into books of accounts. They have to make provision. Okay, so there are various methods of arriving at what is the liability of various, whether if it is leave salary, whether it is gratuity, okay, superannuation fund. There may be various benefits, though I'm not getting into those calculations. Even I will not be able to. I'm not expert in that. So the expert person will take the data of the employees, their age, their service in the organization, and what is the expected service, average expected service of people in the organization. All those various factors they take into account, and they give you a tabular saying that gratuity may be so and so amount, leave salary may be so and so liability as on 31st March 2023. Year end they will give some value that this would be the value of so and so benefit which may occur as a liability to you. Okay, so if this particular liability is more, see, there will be 31st March 2022, you would have already taken some liability as provision. Now 31st March 2023, okay, here there will be some new figure depending upon the more number of people join the organization, or depending upon these existing people service is getting increased, then the provision also will be required higher. Suppose if any of the people left from opening, I mean from 1st April, then this liability would have got reduced to 90, say, because 10 is already paid. Then after new joinees and all, there will be revised liability as on next subsequent year. Then whatever the difference is there, you have to maintain 110 rupees as on this particular day. Then you have to make provision for 20 rupees as per the valuation given by the expert person. So say for example, if it is a gratuity, then we will say gratuity account debit to provision for gratuity. Okay, like that. If it is salary, I mean leave salary, okay, which they are entitled for encashment, then for that also you have to take similar provision. And for short-term benefits, it is a regular entries which we take for short-term benefits. Like you see, at the year end, we make one entry for salary. Okay, whatever the breakup is there, basic account debit, or HRA account debit, because March salary anyway would have not been paid. Okay, so for this we other allowances account debit, special allowance account debit, to PF payable, to PT payable. If bonus March, if they are accruing bonus account debit to bonus payable, okay, to net salary payable. This entry is a regular salary, monthly entry. This will be entered on monthly basis anyway with respect to each month. So these are all short-term benefits which will be anyway taken care. Wherever there is a long-term benefits, where there is a required actual valuation, that has to be that valuation report has to be taken. Based on the valuation report, you have to make the provision for the differential amount. If by chance, if this liability is reducing for whatever may be the reason. Many people left the organization or many people has been removed due to downturn in the economy. Then you have to reverse the provision which you have taken here. Suppose you have made last year 100 rupees as provision. Now the actual said it is only 80 rupees is required. Then you have to reverse the provision to the extent of 20 rupees with the same entry. With whatever nomenclature, if it is leave salary. If it is gratuity. Okay, this is simple. There is not much here. Now we'll move to accrual of interest on deposits and interest on loans. See why this is important. I say different banks, depending upon the different, coming to first time talking about deposits, different banks follow different way of accounting. If you would have observed in your financial closures, okay, when you ask for the confirmation letters from banks, some people will add the accrued interest in the deposit amount. See, actually it is not depending upon the bank, it may be depending upon the deposit. Okay, and it may be depending upon the instruction given at the time of making the deposit also. See, when I am making the deposit, there will be a question say asking that whether you want the interest or the time of maturity, or you want the interest on quarterly basis, half yearly basis, or yearly basis, whatever may be the reason. In depending upon that, even your entries has to be in the same fashion. You cannot just say, sir, there are, say for example, deposit 1 and deposit 2. In case of deposit 1, it is on maturity. Interest is payable on maturity. In case of deposit 2, quarterly. Okay. So in case of first deposit 1 on 31st March 2023, say for my deposit account is 1 lakh, deposit amount base amount is 1 lakh, and accrued interest is 10,000. Okay, and this deposit is getting matured after 31st March 23. So if you ask balance confirmation for this particular deposit, he will give you 1 lakh only as confirmation, but he will give you one note or something like that, accrued interest 10,000. Okay, like this he will give. Then you have to take entry as accrued interest account debit to interest income account 10,000. Okay. If it is on maturity, they will add it to the here it is on maturity, they will add it to the deposit. If they are adding it to the deposit, then it will be deposit account debit to interest income account 10,000, and the balance confirmation will be 1 lakh 10,000. Similarly, here what they do, they are releasing the interest on quarterly basis. It will get credited to the current account because it is business where I am talking about current account. So, but what is the why it has got accrued is because the quarter did not enter. From the date I have deposited, the quarter is getting over, say 30th April 2023. On 30th April only they will give the credit. So during the month of during the year of 22-23, there is 2 months accrual. Okay, this 2 months accrual, he will mention that this 10,000 is accrued against so and so deposit. At that time, what you will take the entry as accrued interest account debit to interest income account. Okay, this is how you have to take the entry. Depending upon the balance confirmation, see, we do not know. We will only see if at all if it is a new deposit, we check the deposit receipt and we will see what is the base amount. Okay. At the time of balance confirmation, depending upon how he is giving the balance confirmation, whether he is increasing the deposit value, then you have to increase the deposit value. If he is just keeping the deposit value as it is, and if he is showing the accrued interest separately, then you also should take accrued interest separately. Okay. Now coming to loans. Coming to loans, see, there will be term loan, there will be CCOD. Okay. These are general loans which are taken by businesses. Okay. In case of term loan, there will be EMI, and EMI will be due on particular day. See, usually what there may be date of 7th of every month, okay, or 30th of every month, some date, it can be any date, okay. Suppose if it is 7th of every month, then definitely there are chances that the balance 23-24 days of March month will be due. See, though they would have paid 12 months installments, 12 months EMIs are paid, 12 months interest is paid, still there will be 24 days due during March month loan. Okay, so that you have to see. Even banks also will accrue this income. Okay, they will also accrue this income as per accrual basis. They also are supposed to take it as income. Fine. So you have to calculate. Interest. If suppose if bank is giving the interest amount, well and good. Otherwise, you have to calculate 24 days interest due, and you have to definitely take as expenses. And another important point what we have to remember is, if it is not a bank, okay, bank there is no TDS. If it is not a bank, then you have to deduct TDS also for the accrual. Interest accrued on loan account debit to loan account to, or you can say provision, because if you take loan account, then your closing balance will not match. Provision for interest on loan to TDS payable. See, TDS will not come other than banks. If it is bank, then TDS will not apply. Otherwise, 194A TDS will apply. So you have to. Otherwise, what will happen if you don't deduct TDS? Then it will be disallowed to the extent of 30% in your income tax computation. So you should keep this in mind. You cannot just see, okay, I have seen the loan account, 12 EMIs are there, 12 interest entries are there, fine, everything is good. No, it is not right. You have to see what is the due date and you have to take provision. And similarly, you have to reverse the opening provision. Okay. See, similar like this year, how you have taken the provision, somebody would have taken the provision during the last year. That's why when I said the provision for expenses and losses, I said all opening provision, you should have a breakup of the opening and closing provisions. Then you will know, okay, they have already taken so much of provision in last year to this extent. So I will reverse it and I will pass this entry for the closing provision. Okay. This is the with respect to interest on loans. And if TDS is applicable, then you have to take the TDS liability and pay it. Fine. So with this, the first topic with respect to entries is over. Okay. Now there is another small portion which is there are no entries for this, but you have to have numbers for closing the financials. Okay. So if you see my content which is given, there I have given only identification, no entries required. Okay. In that, advances received from customers. See, there are say 50 customers. In this, 45 customers amount due is 50 lakhs, and 5 customers have paid in advance for whatever may be the reason. I have given them more discount, cash discount, so they have given a more advance, like that, whatever may be the reason. There is 5 lakhs receivable from these 5 customers. Okay, as per disclosure requirement, okay, as per standard, you have to show 50 lakhs receivable in debtors and 5 lakhs advance received from customers in other liabilities. Okay, you cannot show net of these 45. Why? Because this customer is different and this customer is different. You cannot set up different customers. Okay, even if it is same customer, if there are 2 different contracts, then also you cannot merge both. Okay, it has to be reported separately. So these things, there is no entry here, but you need not take any entry. But when you are preparing the financials, you have to show 50 lakhs in debtors, means first you should have list of customers and you have to do the working, whoever has paid in advance, and you have to take them to the advances received in customers as a current liability. Similarly, there are, like customers, there are creditors also. Creditors. Okay, here I am not saying advance paid to creditors. It is similar way like how you have taken advances from customers, like you would have given advances to creditors, then you have to show it on the asset side. But here there is another aspect, that whether it is a capital advance, capital creditor, or normal creditor. Okay. If it is, see, whatever asset I am building, if I have paid money in advance, then it will become in capital advance and it will be in long-term loans and advances. Okay. And if it is a capital creditor, then again it will be in creditors only. It will not be differentiated. Okay. And now there is a capital creditor also, we have to show it separately, capital creditors. And if it is a normal creditor, then it will go under sundry creditors. Of course, again, here, as per MSME Act, we should differentiate MSME and non-MSME. This we will, more detail, we will see when we are learning the financials. Okay. So this is another aspect of creditors. Apart from this, wherever the MSME overdues are there, then you have to calculate interest. Okay. So this calculation is also required before we start preparing the financials, because based upon this interest, your provision for expenses, losses, it is part of that only. This interest is also your expense which you are liable to pay as per Act. Okay, so you have to see, the first topic is mainly preparing ourselves for the preparation of financial statements. The major topic is preparation. Okay, preparation, we will understand the format and which number has to be put where, that we will understand. So that is the reason first I have taken this closing entries, so that when I am explaining to you the format, I need not get into these aspects. Okay. So here, when MSME is there, wherever there are overdues more than 45 days, then you have to be ready with your calculation of interest for the overdue amounts. Fine. Next, coming to contingent liabilities. This is also an important important topic. Okay, so one is capital commitments. What is capital commitments? I have given some purchase order for constructing a capital asset of mine, and say, so for example, for 10 crores I have given the order. Okay, but till March 2023, 31st March 2023, I have executed only 2 crores. Okay, but my purchase order or work order says 10 crores is the total order. So this 8 crores, whatever is there, is my capital commitment. It will come under contingent liability. So open purchase order with respect to capital commitments only. If it is my day-to-day business, then it will not come here. Please remember, it is only with respect to capital commitments, not with respect to regular purchase orders, which I am giving for day-to-day business. If I have given some purchase order for raw materials, then that will not come here. Okay, this is only where I am giving capital. I am building some capital assets, and with respect to that, I have given some order, and there is open order in that. Then whatever is unexecuted, uncertified work amount is there, or unexecuted or uncertified. Okay, though that amount has to be taken as capital commitment. Fine. Guarantees. See, guarantee, you would have given guarantee to your group companies, okay, or you would have given guarantee for some director, some you would have given on behalf of the company. I mean, not you, the company would have given guarantee for group companies, or it may be given to any other. Suppose this company is also a partner in some other organization, then for that purpose you would have given some guarantee. In those cases, you have to take it as a contingent liability, because that guarantee may come as a liability at any part of any time due to non-performance or whatever may be the reason. So that has to be. See, these figures you should know. Here I am not talking about disclosure only. You should have all these figures in hand, then only you will be able to complete your financials. Okay, this is like a checklist. Whatever entries I have been telling you, and whatever the points now I am telling you, which are not required for interest, but it is required for completing the financials, then only you will be able to complete your financial. Otherwise, it will not be complete. It will be half cooked. Next, lien amounts. See, lien amounts, we spoke about deposits. Okay, if you just say I have 10 lakh deposit in so and so bank, but this deposit you would have given as a lien to local authority for some permission. If as a layman, if you don't mention the lien on this 10 lakhs, as a layman, I will assume that this is a free deposit, right? Which is not true. Then I will not have any share in this 10 lakhs only. Okay, so it is important to identify wherever there are liens. See, when you take balance confirmation from bank, they will immediately mention if there is any lien in that particular account. Okay, those things you have to, wherever, suppose there are 10 deposits. In 10 deposits, there are 3 deposits which have got lien. Okay, so those total of those 3 deposits have to be taken under contingent liability, not contingent liability. It has to be identified and it has to be mentioned in the financials. So you should know which are those deposits and what is the amount totaling to. Okay, out of 50 lakhs deposits, 10 lakhs, 50 lakhs deposits, 10 lakhs is under lien. Like that, you can identify and keep it, and which are these deposits. Okay. Next, mortgage outstanding details. Like lien, you would have given some fixed assets as a mortgage. Okay, even that you have to identify, and you have to see which are those assets which are mortgaged to bank and what is the loan outstanding against that particular mortgage. You should know the values. Okay, these are some important points which respect to contingent liabilities. and current and non-current assets. Coming to next point. Current and non-current. See, now you have identified there is a liability, for example. There is a liability. Okay, this liability is maybe paid in 12 months or more than 12 months. Say, for example, term loan. Term loan is there where every month you are making EMI payment. Okay. So next 12 months of the EMI comes under current liabilities. Okay, that you have to report it separately. Again, it depends upon Ind AS financials and IGAAP financials. We are discussing in our next topic, not next topic. Whenever we are discussing the financials, we are discussing based on IGAAP only. But I will highlight wherever there is a important point with respect to Ind AS. Okay. So suppose if I am telling some current and non-current, if there is some major difference between Ind AS and IGAAP, that points I will tell you. Okay. But we are focusing on IGAAP only. So 12 months EMI next coming. So if we are on 31st March, say if we are on 31st March 2023, you are preparing the financials. Say if 10 crores term loan is due, and every month you are paying some, say 20 lakhs. So next 12 months 2.4 crores is current liability, because it is payable within 12 months. That you have to see why this is required. Otherwise, whatever the ratios you are preparing will go wrong. If you don't differentiate current liabilities and non-current, then your ratios will go wrong. Okay, so then the person who is looking at your financials will not get a right picture, right? So you have to identify whatever the current liabilities are there, and you have to accordingly bifurcate. Okay, there is no entry here. See, your total liability of 10 crore will remain same. But in 10 crore, you will show current liability as 2.4 crore and 7.6 crore as non-current liabilities. Okay. And last point, sales to related parties, sales, purchases, related transactions with respect to related parties. Even if you see in the financials, whether even if loans and advances, related party, non-related party, subsidiaries, okay, holding company. So those figures also you should have. Suppose you have taken unsecured loans from 20 people. In that, 10 people or your own group company, subsidiary companies or holding company, subsidiary, holding company, that means co-subsidiary. So, for example, H is a holding company. There are S1 subsidiary, S2 subsidiary for H, and there are transactions between these two. Then this will also become related party. So whatever the transactions between S1 and S2 also will come under related parties, because they both have same holding company. Okay, they are co-subsidiaries. Fine. So depending upon, you should have, if you are going any audit for any big organization, you should know what is the tree. See, because they will have multiple companies. Okay, and there will be one holding company. You should understand what is their hierarchy and what is the tree of the organization. Then you will be able to give right disclosure in the financials. Okay, so you should, wherever the loans and advances transactions are there between related parties, you should identify what are the transactions entered during the year and what is the outstanding. Okay, what is the income. All these things you should have those numbers, so that you will be able to put it in the financials. Fine. So majorly this topic, preparation for financials, okay, is done. And anyway, GST I am covering it separately. Similarly, like GST, all TDS entries, okay, GST entries, TDS entries, Okay, you should see that everything is complete in all respects. Like there will be reports, what is to be deducted and what is deducted. If there is any GST, I'm not talking. I am taking next session GST. So I am talking with respect to TDS liability only, and not only liability, TDS receivable and TDS payable. So in case of TDS receivable, you should match income with respect to 26 AS, and TDS payable, you should see what should have been deducted and how much to be how much has been deducted. And if there is any difference, you should take the entry for the difference amount wherever there is a short deduction. If they have permission for short deduction, you have to verify that the certificates given are in line with the deduction. Okay, there should not be any difference. Suppose they have obtained for short deduction, some customer had given some vendor has given short deduction of certificate to this entity, then say for example for 50 lakhs, up to 50 lakhs they will go as per the certificate. Above 50 lakhs, then they have to deduct in a normal way. So those things you have to verify and take the differential amount entries. Fine. Next class we will cover GST, then we will go to financials. That would be better because GST also again I am taking entries only. So it is part of closing entry. It is actually not closing entry. It is regular entries, but still I want to because I have seen many people passing left and right entries for GST. So that is the reason I thought let me teach you my view of entries for GST. You see, you can. I am not saying whatever I am going to say for GST entries is the right way, but I feel it is more logical way than now. If you see many people, accountants, what they are doing, they will see the closing balances in the input ledger, and they will pass the entry. One closing entry, they will adjust and make the entry. Okay, that is not the way it has to be passed. So I will explain you in detail. I will show you because you are also working in an audit firm. I will show you one tally entries so that you will also have clear understanding. Fine. So I am done with the first topic. We will move to GST entries in the next topic. Then after completing GST entries, we will go to financials. If you have any doubts, let me know. If you didn't go through that Excel of notional income, just go through. If you have any doubts, let me know.
No, sir.
Fine. We'll wind up.
Yes, sir.
We'll meet on Friday.
Okay.
Okay. Thank you.
Okay. Thank you, sir.